Hey everybody, December 20, 2011, and well, today stunk for me, as you might have guessed. And as I've repeated ad nauseum, it would have been horrific if it weren't for my one SPY long that helped ease the pain. That was actually really dynamite winner. I'm just really glad that I did that. Still not a good day. Down about 1.9%, which hurts, but judging that the Russell's up over 4%, I don't feel quite as stupid. And yes, here again, I'm dragging out the this analog, but it's important, and I think it's worth keeping an eye on. And whether you're looking at the dollar HUI or GDX or the euro, or in this case the New Zealand dollar, the analog is the same. Now, I've tried to line these up. I'm sorry, they're not quite lined up. Let me just kind of describe them. We're looking at the New Zealand here, and the '08 to present versus '05 to '08 time frame. So we've had the big descent, the ascent, the kind of range bound, and above this line, below this line, and a steady climb. So let's stop there. So we've got descent, ascent, above this line, below this line, and a steady ascent. So now let's zoom in a little bit tighter. And again, this isn't lined up great, but it's not awful. So we have the noodling around the line here, descent. So ascent, ascent, and kind of series of kind of banging its way higher to this high here. Same deal, to a high, and then a fall, a lower high, and then a big tumble. So a fall, a lower high, and a big tumble. A push back to that former line, and a tumble for a somewhat lower low, as we have here. And then noodling around and making its way partly higher. And here we have making its way partly higher, and easing back. And so this is where we are right now. This is up nearly 2% today. And these line up and are doing things that are interestingly similar. And as I've pointed out more than once, this is what I find so interesting about it. You know, what happened afterward. And it'd really be nice if something like that did happen, because, you know, after waiting, coming up on 3 years now for some rock and roll in Bearland, it'd be nice to have one of these analogs really pan out. You know, sometimes they do, sometimes they don't. Sometimes they do for a while and they stop. But food for thought, as they say. Let's walk through just some indexes and commodities, and that'll be it for the day, because I'm really tired. I got, no kidding, 1 hour of sleep last night, not from worrying about the markets, but from just holiday stuff. So I'm pooped. Really need to just flop in bed. But let's thumb through these things before I flop in bed. Some of these I'm not even going to bother with because they really have nothing to say, and others I will stop with. I'm not going to drag you through the analog thing again, but just to point out this is doing really cool things. My view is that we are in this sort of July '08 type of range down here, a la here. And provided we stay beneath that gap, I think that this continues to be really interesting. Even if it closed the gap and headed higher, it's still kind of interesting, but it'll be especially cool if it stays beneath that. And when we get to GDX, about 15 symbols from now, you'll see that again. The Dow up a shocking 337 points. It's sort of funny because if you think about the fact that we topped on May 2nd, and if you took a time machine back to May 2nd and told the person there that, you know, all the central bank, the dollar swap and the European bailouts, and oh gosh, you can look forward to a bunch of 300, 400, and 500 point pushes higher on the Dow, they would assume that, gosh, it doesn't be like at 19,000. But this is just kind of the violent nature of these things, just violent. It's been crazy gear. will not be sad to see it go, but it's been just crazy. And today is just one of many loony days we've seen again and again. All those big white bars, and conversely the big black bars. A very unmellow market. In sharp contrast to something like, say, this. I mean, look at that. It's just, until this hit, it was just silky smooth. This was the whole China thing back then. But man, can you believe how smooth that is? Nothing like this. Whipsaw City. And today's just another example. And I've given up on this year. I've decided that if we get even one more good strong down day, I'm just going to cover and I'm done for the year, because I give up with trying to see any trend lasting more than a day. I want to wrap 2011 up. So give me just one down day and I'm out of here, and see you in January. Let's get back to the charts. I'll just skip a bunch here. We'll go down to the Russell. This, as I said, had a very strong day up, about 4.2%. Still in a series of lower highs. And it would take 1 or 2 days like today to happen again to really change the tune here of what's going on. Because right now like here, this changed the tune, because this was the same deal. And then back in October, it was so strong that it really pushed its way higher, only to kind of give some up again. So I'm not convinced that we're in like a new bull market here. Complacency is certainly back in style. If you look at the VIX, I mean, gosh, we're not that far away from the teens at this point. It wasn't that long ago we were at about twice the levels we're seeing. In fact, just about 10 weeks ago or so. Seems like a century, doesn't it? Let's look at a few commodities just to wrap things up. Crude oil, as I mentioned in a post earlier today, seemed to be more like a relief rally than, honest to goodness, the real deal. The ES, I'm still respecting this line here at 1242 and a quarter as sort of kind of a line in the sand. Clearly it's not a hard line. Look at all the activity. But as sort of an approximation of what a resistance area is for this chart. Now, in spite of the fact that Oracle's down over 8% right now, the NQ is continuing to be strong. It's up 3 3/4. I haven't looked at the intraday on this, but yeah, you can kind of see that the Oracle shock was sort of taken into account already. So the fact it's up 3 3/4 sort of takes away from the fact that it had fallen pretty sharply based on the Oracle news. So interesting little quirk there. And lastly, and I think this is very interesting, is the bond future. This is the March. I really had looked to this as an exciting marker for strength in bonds and weakness in equities. And as of yesterday's, it absolutely was that. Today really muddies the water on that. We have broken beneath again this important line, sort of throwing ice water into the face of what would have been a really clean breakout. We're still above this much more important ascending trend line, so if it sort of consolidates here around 143, 144, then moves higher, fine. But it would have been nice to just move on from there. Anyway, 7 days left this year. Take them one at a time. And keeping risk pretty low right now. Only 35% committed at this point. After a day like today, you can understand why. That's it. Good night.